Hello, everyone. Let's get you set for the big Bank of England decision coming up later today. There's a lot at stake for the pound. So let's break down what's happening, what to watch for, and how the technicals also are lining up. Now, let's just take a step back and look at the big picture a bit. Markets are expecting the BOE to cut rates by 25 basis points. That will be the fifth time that the Bank of England is actually cutting over the past year. But what's really interesting this time around is that the split uh, within the Monetary Policy Committee, the MPC, there is a real tug of war going on. Some members are worried about the economy is slowing down. Others are more focused on inflation, which is actually still running hot, as the most recent data also showed. So we could see a three-way vote split, right? With few members um, want a, wanting a bigger cut to have the economy. A couple may not want a cut at all because of inflation, and the majority um, wanted to actually go ahead with this 25 basis point cut. This kind of split can really add to market volatility, right? Now, there's something that is perhaps a little bit important as well to consider for this particular uh, decision, that the BOE is also going to update its forecast for inflation and growth, right? So if they revise inflation higher, that means that they will be worried about sticky prices, and that would mean, of course, fewer rate cuts ahead. It would be interpreted as hawkish. But if they cut the GDP growth outlook, it will indicate that there are concerns about the economy, the state of the economy, and that would open the door to more easing down the line. So pay attention to the projections. Now, when we look at technicals, right, we do see a very clear double bottom over here, right? One, two. And this bounce is kind of natural or expected. We also met resistance support at the lower oversold territory in the RSI. So on the one hand, this bounce is rather expected, I would say, and natural. On the other hand, I would be looking for a potential move to around the 50% of the Fibonacci, around the 134.70, and I would even say 34.50, right? Because you've got a top over here and a top over there, and the bottom over here, of course. This is kind of a high activity zone. If the BOE is hawkish, and perhaps even higher, to be fair. But if they are dovish, I would be expecting prices to, to start to continue this move to the downside. Because to be fair, if we look at it a little bit closer, up until now, we have okay, we actually saw a retest, which is okay. So forget about that. No, the thing is that we really have to pay attention on whether prices are actually retesting, because in case that would be not a retest over here, right, then we would still be looking for an impulsive move to the downside. Either way, or any way we look at it, there is still a downward channel to take into consideration here. So I will draw my channel over here to find potential test levels, if that makes sense, on the one side, right? But something else, which is quite important as well, guys, is the potential of a head and shoulders here that could have two sort of shoulders rather than heads. So you see that one shoulder could be here with a bit of a head and shoulders head attitude. I would perhaps just look at it from that perspective for now, okay? Because there is a potentially an end to this move to the downside. We came to around the 61.8 Fibonacci retracement as well from the beginning of this leg, which is exactly what we want to see when we're looking at the end of head and shoulders. Let's not forget the head and shoulders, guys, is not a reversal pattern, it's a continuation pattern, and that down here is its completion potentially. However, also, this could be the head and shoulders with a bit more of a complex head. This would imply that the bottom, the neckline is down here, the double bottom. So we would be looking to come up to the previous shoulder at around 134.50, right? So that's going to be an important level. That's why I called it just earlier. And then from there, look for potential move to the downside. Now, if we did move lower down, that would open up the 78.6 Fibonacci retracement, which is down around below the 130 level, right? But that would probably mean that there is a lot of dovishness in the BOE. So this is something that I would definitely be paying attention to. Okay. If we go a little bit lower down, okay, we do see some sort of hidden bullish divergence over here, which is um, following this move to the downside is kind of expected. But now we have actually gone up to around the 133.75, and we are flipping that support to resistance. So where we currently are as well is a very critical level, and the BOE is going to determine whether we're going to be opening that door to the upside once again, with of course the levels that we talked about initially, but also looking at the swing highs at 135.90 and the previous stop at 137.80, or are we going to be actually seeing this high activity level becoming a support, a resistance, and flipping to resistance, which would be a confirmed level, and then head towards that 130, 139. It's of course it remains to be seen. So in short, today's event, of course, is all about the balance between inflation and supporting the economy, and the decisions of the MPC levels. Of course, what will Andrew Bailey is also going to say. The technicals have also brought us to a level that it feels like it's balanced, and a breakdown would continue the downtrend. A break to the upside is not certain yet, could lead to a continuation to the upside, with very, very, very important level, of course, at the 135, 34.50, because it could potentially be the peak of the right head and shoulders pattern. So stay tuned for the announcement and be ready.